Have you ever felt like you were cheated out of your hard-earned money? What if the very people you trusted were the masterminds behind it? Stick around as we uncover a shocking tale of corruption and betrayal that reaches the highest levels. That's exactly what went down in the Credit Suisse scandal. High-ranking executives got caught in a massive bribery and corruption scheme, siphoning off millions and crippling an entire country's economy. The very people trusted to manage money used their positions for personal gain, leaving investors in the dust. It's a shocking tale of greed and betrayal you won't want to miss. The $2 billion Mozambique bond fraud, also known as the tuna bond scandal, was a complex financial scheme that involved bribery, corruption, and fraudulent loans facilitated by Credit Suisse bankers and Mozambique's government officials. Between 2013 and 2014, Mozambique's government secured $2 billion in loans from Credit Suisse and VTB Bank, allegedly to fund 3 state-backed maritime projects: a tuna fishing fleet, shipyards, and anti-piracy security boats. These loans were backed by government guarantees, meaning Mozambique's taxpayers would ultimately be responsible for repayment. Instead of being used for the projects, hundreds of millions of dollars were funneled into bribes and kickbacks to government officials and Credit Suisse bankers. Andrew Pierce and Surjan Singh, both Credit Suisse executives, personally received millions in illegal payments. Mozambique's then finance minister, Manuel Chang, secretly approved the loans without proper parliamentary oversight. Meanwhile, Privinvest, a Middle Eastern shipbuilding company that was supposed to supply the ships, also played a role in distributing bribes to key players. To keep the fraud hidden, the loans were kept off the books, meaning international lenders and investors had no idea Mozambique was racking up billions in debt. The government lied about its financial situation, misleading bondholders who had invested in Mozambique's economy. The maritime projects were largely dysfunctional or never fully completed, with much of the money vanishing. By 2016, the scam unraveled. Mozambique defaulted on its loans, causing an economic crisis that led to currency devaluation, inflation, and a financial meltdown. Credit Suisse was hit with global fines totaling $475 million and was forced to write off $200 million of Mozambique's debt. Manuel Chang was arrested in South Africa in 2018 and later sentenced in the US. Pierce and Singh pleaded guilty and were banned from working in the financial sector. A London judge ultimately ruled that Mozambique was defrauded, confirming that the entire scheme was based on corruption. This scandal is a classic example of corporate and political corruption at the highest levels, with ordinary people paying the price. The Mozambique government and corrupt bankers kept the $2 billion loans hidden from international institutions, bondholders, and the public. Normally, when a country borrows money, it's reported in its national debt figures, but in this case, the loans were classified as state-backed guarantees rather than direct government debt. This meant investors and institutions looking at Mozambique's financial health never saw the full picture. Credit Suisse and VTB Bank did not disclose the full extent of Mozambique's borrowing to bond investors. Credit Suisse presented Mozambique's financial situation as stable and secure, even though they knew about the secret loans. Investors who bought Mozambique's publicly issued Eurobonds in 2016 were never told about the hidden debts, making them think the country's debt level was lower than it actually was. Mozambique's then finance minister, Manuel Chang, personally approved the fraudulent loans without proper parliamentary approval. Officials falsified documents to international lenders, making it look like the loans were legitimate. When investors asked about Mozambique's debt, government representatives assured them everything was under control. Credit Suisse and VTB Bank approved the loans without enough due diligence. The International Monetary Fund, IMF, and World Bank weren't notified because the loans were structured to bypass typical debt reporting requirements. Since the loans were presented as funding for national security, anti-piracy boats, shipyards, and fisheries, they weren't heavily scrutinized at first. The fraud involved multiple entities, including government officials, Credit Suisse bankers, and the shipbuilding company Privinvest. Money moved through shell companies and offshore accounts, making it difficult to trace. The projects appeared legitimate on paper, making it hard for outsiders to spot the scam. In 2016, Mozambique sat on its debt, triggering an investigation. The IMF discovered the hidden loans and cut funding to Mozambique for not disclosing them. So, could something like the Mozambique scandal happen in America? Absolutely. Corruption thrives when the rich control banks, politics, and big business, when regulators fail to act, or are in on it, and when people trust the system without asking questions. This kind of corruption already happened in the US. Take the 2008 financial crisis, for example. Big banks made reckless bets with people's mortgages, crashed the economy, and then got bailed out while millions lost their homes and savings. Then there was the Enron scandal, where executives faked profits to make the company look successful, cashed out before everything collapsed, and left employees and investors with nothing. And let's not forget Bernie Madoff, who scammed people out of $65 billion with a fake investment fund, living in luxury for decades while thousands lost everything. The Mozambique bond fraud is a harsh reminder that big banks and governments don't always have regular people's best interests at heart. Corruption at the top always trickles down to hurt everyday citizens. Just because a bank is well known doesn't mean it's trustworthy. Credit Suisse was caught in a massive fraud, proving that even big financial institutions prioritize profits over ethics. Government decisions also impact your finances, even when you don't realize it. They paid the price through inflation and economic collapse. The lesson? If something seems too good to be true, it probably is. Investors thought they were backing a solid deal, but the truth was hidden. This happens all the time with Ponzi schemes, shady investments, and financial scams. Fraud is easier to hide when financial systems are complicated, making it even more important to pay attention to where your money is going, whether it's hidden fees, sketchy investments, or companies moving money in secretive ways. And the people who suffer the most? Regular citizens. The corrupt bankers got rich, while the people of Mozambique got stuck with the consequences. It's no different from past banking scandals where taxpayers bailed out billionaires. Never assume banks and governments are working in your favor. Stay informed, ask questions, and be skeptical of deals that seem too perfect. Because when fraud happens, the rich rarely lose.